Welcome to the June 23rd, 2025 advance report from McGowan Group clients and networthradio.com listeners. Hot war in the Middle East that started essentially a week ago with Israel's first strike on Iran. I'm going to cover the market impacts and we're going to focus on investment strategy. So to frame this, first, I've got 4 asset categories that we use in McGowan Group Wealth Management portfolios. By the way, I'm Spencer McGowan, President, McGowan Group Wealth Management, and your financial weatherman. Thank you for tuning in for your fast-paced tour of the global financial markets. Here are the 4 asset categories because we define them by what they're supposed to do for us. High cash flow, that's global lending. And that is usually the B-rated high yield market. Safety and income. And that tactical safety can increase when we feel the market's relatively high. And of course, we can deploy that, for example, during April when we had the tariff meltdown. Growth with innovation. That is just pure growth, right? Good growth companies. And growth with income. Those are dividend companies. Now that we've framed it, we'll get to the action this week. All right. Big impact. You can see it right here. West Texas Intermediate crude oil hit a high of over $77 a barrel this week, settled back to about 75 at the end. That is a 20% one-month increase in crude oil. Wow. You go to natural gas, and natural gas had a 17% increase for the month so far. It underscores the value of dividend-paying energy infrastructure, and I'm going to cover how it fits into a strategy. There's your natural gas. You can see that spike right here. Wow. And, you know, this doesn't make a new high. It did in March. That was during the winter time. But there is something behind the scenes that's happening with natural gas assets that I'm going to cover, and you also get dividend checks in the category. Wow. And then I'll show you why in times of Middle East conflict or just straight outbreak of war, how you can hedge a portfolio effectively based upon 2022, but also get a pay raise at the same time. This is the 10-year Treasury. One thing that we did not get, right, was we didn't get panic buying in Treasury. The yield at 4.4% on the 10-year. Of course, Trump pops off again, calls Jerome Powell, the Fed chair, a stupid person. Now, this is on top of, prior to that, he had said, Mr. Too Late, a total loser, and then when he didn't cut in May, he called him a fool. But one of the Fed governors, Waller, came out this week, said it looks like a July cut in his mind, and so you'll start to get the cuts. They updated their projections at the Fed. This is important. The Federal Reserve projections, which we delved into, they're actually very bearish on the economy, and even though it hasn't happened yet, inflation has been down, and I'm going to get to the inflation hedge part of this, but inflation's been down to a 4-year low, and 2 of those months, the past 2 months, there were tariffs on. So what gives? Inflation's down, but the Fed says, no, we think that tariffs are going to cause inflation to spike by nearly 1%. Well, it remains to be seen. But what was true back in April, what we thought was true was not true, and that was tariffs were instantaneous inflation and instantaneous recession. Atlanta Fed came out this week, said GDP's running at 3.4%, but the Fed's projections are down at 1.4, even though Atlanta Fed is part of the Fed, just to point that out. This is 2022. Let's go through the invasion by Russia of Ukraine in 2022. Now look at this. Oil spikes all the way to $123 per barrel. Wow, that was fast. And at the same time, the other graphs, this is oil, and you can see it settled back to 70. this is a potential playbook, but there's also an investment strategy that's good for inflation. And that is when we look at the S&P 500, that's the green. The yellow is oil and gas companies in the S&P. That's the low-cost ETF. So let's map out what happened. Outbreak of conflict. By the time the market bottomed in June, 4 months after the invasion, the S&P 500 was down 20% for the year, right? So there's an initial sell-off in stocks. But I want to hedge that, or at least respond to it. So, and the Dow fell this week, essentially from the outbreak of conflict till now. The Dow goes 43,000 to 42,000, all right? Yellow, what does this tell us? This is the oil and gas index for the year 2022. I started right here. By the time the S&P 500 was down 50%, well, was down 20%, oil and gas stocks were up 50%. And they held that pretty well as the company earnings had the windfall, the recognition that energy infrastructure is actually a valuable asset, and it's still, in our opinion, way undervalued. So there's your potential hedge, especially based upon what happened right here. Next, this is the 20-year chart of oil versus inflation. Now, everybody talks about dollar's going to get pummeled, and so you got to buy gold and Bitcoin. Problem is, if nobody else wants to buy that stuff, you don't get a dividend, right? What could be a better inflation hedge? Well, this is 20 years. I go back to 2005. Oil hits 147. That was before the Great Recession, right? Look what happened to inflation in the Great Recession. It went to deflation, -2. Wow. But I had a huge spike in inflation corresponding exactly to oil. This is 2022. And then we got 9% inflation. Wow, what category for part of the portfolio that pays dividends would be worth more because of something that causes inflation? That's also an inflation hedge. Now, not a recommendation for your portfolio till you come down to the Crescent, meet the team that cares, or set your time for a Zoom. We are Zoom friendly. And we're going to sit down, do a brainstorming session, draft an investment plan outline for you, and we can make a huge difference over the next decade. You want to get the team that cares on your side. Thank you for tuning in. Thank you for tuning in today to Net Worth Media. We also have Apple Podcast. Simply type in Net Worth Radio and boom, it'll hit your phone right then. If you also go to networthradio.com on a browser, you're going to be able to meet the team. You can see our performance track record, the model portfolios that go with today's broadcast. Also at networthradio.com, the longer play podcast is available there as well. We're grateful that you've tuned in. Remember, when we talk about a security, it doesn't make it a recommendation for your portfolio until we actually complete a written plan for you by Zoom or in office or simply a conference call. So you reach us at networthradio.com if you want to get that arranged. Market fluctuations and how to handle them. We build high cash flow portfolios, and past performance doesn't guarantee future results, so you do have to be ready for challenging markets. We can build more cash flow during challenging markets than we can when everybody's happy and everything's up, which is when we tend to raise tactical safety. Those allocation strategies are here at networthradio.com. Thank you for tuning in.